Hello viewers, we'll be going over gold miners ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, how we find the models, and the forecast model for gold miners. So back to the technical analysis. Today we're up 2.4% on the 1 hour chart. We're at overbought RSI. As for the 4 hour chart, we're currently at overbought RSI as well. We are now at positive MACD. And for the daily chart, we're starting to see a convergence in play for the MACD, and we were at negative MACD, and we are starting to see positive MACD in that convergence. So this is a positive sign to the upside. However, we do see a possible higher lows in play. So we do have this high back in January 3rd and another high back in January 27th. And it may act as higher lows, so still too early to confirm that we broke out of this slight downtrend. We do see that as a resistance at the moment, and if we do continue to head down lower, the next support will be around the 150-day moving average, which is this orange line right here, at the price of $27.70. So that is our immediate support. And as for resistance, the resistance is around the price of $29.30. So if we were to head up higher, that price movement is roughly around 96 basis points. And to the downside, it is around 4.6% to the downside. So back to the day-by-day probability model. As the day progresses to the 7th day, we see that we're in slight favor to the upside. We have a 67% between 0 to 3% to the upside, and to the downside we have a 17% between 0 to negative 3%, and on the extreme case we also have a 17% for gold miners, sliding down between negative 3% to 6%. So let's head to the day-by-day forecast for GDX. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. Again, this model is now available in the link below, so do check it out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is a trend that I believe is the best match. This trend dates back to March 9th. 2018 to June 5th, 2018. So let me point out why these two charts are similar. So what we have here in the current trend, we start off at the middle Bollinger Band, and then we proceeded to take a slight dip at the bottom Bollinger Band next. So we have those points there, and then we proceeded to touch the upper Bollinger Band afterwards. And let's just mark this at the middle Bollinger Band. And then we see it once more, attempting to touch the upper Bollinger Band. And then we slightly revert back to the main to where we are currently at. So we have those points there. So we have those points. And then in the trend in question, we start to see a similar pattern in play. We see it start off at the middle Bollinger Band. And then we proceeded to take a slight dip, touching the bottom Bollinger Band, and then afterwards we make a reversal to touch the upper Bollinger Band, and then once more we see another attempt right here, and finally right to the very end we see it touch or revert back to the middle Bollinger Band. What we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was March 9th to June 5th, 2018. Back then, gold miners continued to climb around 90 basis points, so slightly to the upside. If we head back to the standard deviation table or day-by-day probability model, it coincides with the 67 basis points or 67% chance of gold miners reaching between 0 to 3%. So we do have that in play. Again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.